this point, you're probably tired of just going from video to video, trying to find information to understand the stock market. And I admit it is very confusing at first, especially if there's terminology that you really just don't know or understand. So my whole point in this video is to try to break down stocks, the stock market, investing, how you can make money. And I want to make this as simple and as easy as I possibly can for you. So much so that even a baby can understand, even grandma can understand, your friends can understand. This will give you some knowledge to put other people on in your community. Because for one, I get tired of trying to decipher all of these terms and secrets and all that kind of stuff when I'm watching videos, and I realize that I wish somebody could just break it down plain and simple for me. And I found the person that could do that, and I want to do that here for you. So in this video, I'm going to break down and give you just a simple understanding about stocks, stock investing, how you can make money, things that you can do as best as I possibly can. And I'm going to make this as quick as I possibly can. So a stock, what is it? Stock is just one way of investing, which is another way of saying I want to put my money in a place to where it will make me more money. When you want to invest, you basically want your money to make you more money so that you don't have to keep working yourself to make money. And if that's you and you're tired of just working, which most of us are, then you got to learn how to make your money make more money. And stocks is one way to do that. So what is a stock? A stock is a piece of a business. What does that mean? I want to break this down for you. Say you have a company. You sell t-shirts. Your t-shirt business is going really well, but the demand is higher than what you currently have right now in supply, whether it's your product or whether it's your manpower and people, whether it's your marketing strategy. Your demand for your t-shirts are just so high that you can't make the money fast enough in order to reach the potential of what you have in people. You need more money. You need more money faster. So what do? You go down to the bank. You ask the bank, I want to make my company public. I want to open my company up so that I can get more money faster so I can scale my business faster. Well, what is the bank going to do? They're going to look at your t-shirt business and they're going to determine how valuable your business is. And if they see your business as very valuable to the economy, very valuable to your community, very valuable wherever you are, they're going to come up with a stock price, and they're going to give you a stock price. Well, here's how valuable your company is at a stock price of $50 per share. It's $60 per share, or whatever the case is. You're going to determine how many shares you want to give out. You would come up with a number of shares for your company, and then you would make your company public. IPO is what this is called, initial public offering, IPO. Now your company goes public for the public to invest in. The value of your t-shirt business has become so valuable that you need so much capital very quickly in order to scale it. And so you decide to go public. You decide, hey, I want to open it up to the public. I want a board of directors. I want shareholders, people to invest in my company, people to pour into my company, give me money, so that not only can I scale the business, but I can also help the economy as well. And so a stock is basically a share. You're sharing. You're buying a piece of a company. That's what a stock is. I hope that's broken down for you, very simple, in simple terms. Whenever you buy a share of anything, you're buying a piece of it. That's basically what that is. So that's a stock. The stock market is just a collection of companies that sell stocks. A collection of companies, public companies, that sell shares where you can buy a piece of them. Apple, Amazon, Microsoft, Google, even a whole bunch of things that we own and wear are public. That's stocks, and that's the stock market. Okay. Now, how can you make money from the stock market? Well, you have a number of ways to make money, but the most known way that everybody knows, which is still tried and true to make money from the stock market, is just long-term stock investing. Let me say that again. Long-term stock investing. There are short-term ways, but what most people know is long-term stock investing. People treat long-term stock investing like short-term, and it's not wise to do that, and we'll talk about that. Basically, all of what that is if I have a t-shirt business and I'm selling a share, a piece of my business, a pie, a piece of my pie for $20 for one slice of my business, and you buy one, you now own one share of my business. Let's say I take your $20, I invest your $20, I scale my business up. Now, not only am I making t-shirts, I'm making t-shirts with great material. I now have your money to make better quality t-shirts. Now my business makes more money. My business goes up. When my business makes more money, the stock of my business goes up. The value of my business goes up. So when you see stock prices go up and go down, up, down, I want you to replace the word stock with value. The value of the business goes up or the value of the business goes down. Today, the business is more valuable. Today, the business is not as been as valuable. That doesn't mean that the business is good or bad. We're talking about value. We're talking about what the business is able to provide in the economy in a given day or in a given period. So if you remember that, every time you hear the word stock, just think about value, stock price, value price. It goes up and it goes down. So if I am making money, the value of my business goes up, the stock price of my business goes up, meaning that the share that you invested, that $20, goes up. That means you've made money. So if you put in $20 and my stock price goes from $20 to $40 and you own one piece of my business, then you've made an additional $20 on top of the $20 you gave me. That's stock investing. That's how you make money. And if you sell your stock, if you sell your share, then you get $40. Now, are you going to get the full 40? Probably not. There are investing fees. There are stock broker fees. Stock brokers have to go out on the floor and sell it. They have to sell it for someone else, right? People sell, they cash out, things like that. It goes back public, right? They put the stock back on the market, right, for someone else to buy, things like that. Some companies even buy back their own stock, things like that, right? So that's what a stock is. That's the stock market. That's the simplest way for you to make money in the stock market. You buy a piece of stock, the value of the stock goes up, the company makes money, and you make money. Let's go a little bit deeper because I want to make this video very simple and easy for you to take away from this. Before we go into that, though, I do want to give you step number one of something that you can do. Because right now you're probably asking, I want to invest in stocks now. And, where do I start? How do I do that right now? Well, I'm going to put a link in the description. I have it in almost every description of my video to an app that I use and have been using for at least the last 4 years now called Stash. You've probably heard of a lot of apps, Robinhood, Webull. Stash is another app that I don't hear a lot about. Stash is a very easy app to use. That's why I still use it. It's very easy to understand. I think you can start with $5. You can actually start investing with $5. You don't have to have a lot of money to start investing. So I'll put a link down below. It's an affiliate link. It'll lead you to invest. It's very easy to see. You'll start seeing your portfolio. You'll start seeing a lot of information, further information about how you can invest in stocks. You'll start seeing a lot of this stuff. Make sure you click that link, open up an account with Stash, start investing. You can start today. But going back to investing, right? Now, what is some general advice? Let's say you go down on the link today, you open up the account. What's some general advice? How should you start? Number one, it starts with education. You need to learn while doing, right? You are at a time in life where you don't have more time to waste not making money and not having your money to make money. You don't have more time to waste with your money not making you money. And so you need to learn as you do, which means you need to be investing your money and then also learning more and more about the stock market as you continue to invest your money. So Here's step one. You open up an account with Stash. Step number two, you put $5 in it. Step number three, you start thinking about, okay, what share or what piece of a company should I buy from? That's the biggest question of stock market. Well, an easy way to where you don't have to do so much thinking about the latest stock and let me go look at this article and I need to know about this business and all this kind of stuff, right? The easiest thing that you can do is put your money towards an ETF. An ETF is an exchange traded fund. That's what an ETF is. So, what does that mean? Exchange traded fund. An ETF is basically a collection of stocks that balances out to where your $5 goes into a little bit of everything. So let's say, for example, the most common, easiest ETF that you can invest in, and this is just something to help you get started, is the S&P 500 Trust, okay? S&P 500 Trust, SPDY, or if you look as far as the ticker goes, SPY, meaning that if you go to the search bar on Stash, you type in SPY, it should pull up SPDR, S&P 500 ETF Trust. It's a trust fund. It is a collection. It is a ETF that follows the S&P 500 index. These are the top 500 companies in America. So if you put your $5 into a fund that invests into the top 500 companies in America, will you make money? I think common sense would say yes, right? If you don't make money, then that means our economy is really going down. If you're not making money, putting your money in the top 500 companies in America, then that means our economy is trending downward, and that's a sign. Does that mean you're just going to lose all five of your dollars? No. Will our economy eventually correct itself? Yes. Are we resilient as Americans and as business people? Yes. Do Americans figure out ways to overcome challenges and struggles when it comes to money? Yes. Will our economy eventually start going back up? Yes. How often has the S&P 500 index, the index, right? It's the tracker that tracks the 500 companies. How often has that been down? Not a lot. Not a lot in like the last 50 years. For the most part, and you've probably heard this, you make about 10% per year on your money when you invest in the S&P 500. Meaning that if I put $100 in there, by the end of the year, if I don't put no more money in there, I should at least make 10% of my $100 or $10. And if you do that every year, and on average, if it's 10% increase on average, you should make money. Now, of course, the more money you put in it, the more money you're going to make. But that is a smart risk to take. So, step number one, open the account. Step number two, put $5 in or more. Step number three, start investing in ETFs, which is a collection of companies. So that way you're not just putting your money in Uber, and if Uber goes out of business tomorrow, you lose all your money. Right? We don't want that. We want to start smart first. We need to get our feet wet first. Let's get our feet wet. I want you to get your feet wet first. Invest in ETFs. Start Googling ETFs. Start learning about ETFs. Start looking at companies within ETFs. And then you'll realize, oh, it makes sense to invest in Apple. Almost everybody I know has an iPhone. Apple is still innovating. It makes sense to invest in Microsoft. It makes sense to invest in Google. It makes sense. It makes sense to invest in Walmart. Invest in the top dogs. If the top dogs are making money, then chances are you're going to make money too. You don't always have to find, oh, well, I see Joey over there has so much potential. Joey could blow up. If I put my $5 in there and Joey ends up blowing up to where his share goes from $5 to $250 overnight success. Look at Joey. You don't always have to find that right now. Because right now you don't have any of your money making you money. And you have to remember that. Right now your money is not making money. You got to remember that this is the place where you're coming from. Start making money with your money first. And then as you branch out and build your portfolio of ETFs and companies, not saying don't invest in companies, but just start with ETFs, then you can start talking about, well, I like this company. But that's a basic, simple, easy way to start investing in stocks. And at least your money will start making you money. Now, the biggest thing, let's just start. I want to debunk some questions here because I don't want to hold this video and make this video too long. Number one, is it risky? Yes, it is risky to invest in the stock market. Can you lose money? Yes, you can lose money. Can you make money? You can definitely make money. Is it smart to invest in the stock market? As much as all these people tell you don't do it and this, and that, that's with anything, man. It's a risk going to work every day if you work for somebody because you could be fired. It's a risk eating fast food because you can get sick. It's a risk eating healthy food because they lying to you about fruits and vegetables. It's a risk putting your money in the bank because the bank's going to take your money and loan it out to somebody else. And if you go and get it, theoretically, it might not even be there. Is it risky? Everything is risky. Pick your risk. Everything is risky. Which risk are you willing to take? Are you willing to put your money in a bank? It sit there. You don't get really no return on your investment, money back, cash flow on your investment. When you go to the bank, you put your $400 in, you go, your $400 is still there, right? They take your $400 and they give it to somebody else. But when you go get it, though, it's there, right? That's a risk. Would you rather take that risk with little to no return, or would you rather trust in Sally? You see what Sally's doing for the world. You see Sally's trying to make shoes available for everyone in the world at $5, good quality shoes. You like what Sally's doing. She's taking good resources, not just cotton and all the cheap stuff, right? You're getting good quality shoes from Sally. But Sally just needs a little bit more money to really make this vision of hers come true with this business. Would you rather put your $400 with Sally? Sally not only gives your $400 back, just the same way the bank will do, but gives you extra in dividends or just gives you extra in equity on your return. Which risk are you willing to take? They're both risks. I trust in people. My business is with people, not businesses. I invest in people. That's why it's good to know the people of the business. People drive business. So when you invest in stock and you invest in the value of a stock, you're investing in the people of that business to drive that business. You're investing in the CEOs. You're investing in the CFOs. You're investing in the managers, the bottom line, the supervisors, the employees. You're investing in those people to do a good job in order to make that business successful. That's what you're investing in. And that's important for you to remember when you're putting your money somewhere. What's the payoff? Why should you invest? Well, one day you're going to get to the point where you can't continue to make money yourself physically. You're not going to want to, at least for survival, right? You have to get to a point where you're free financially, where you can do what you want to do, not what you have to do. And right now, for most of us watching this video, we have to make money to pay bills. We're trying to take vacations. We're trying to go on a cruise. We're trying to get the best of things to provide for our family. We're trying to enjoy this life. We don't want to just continue to struggle. We want to enjoy this life. And so for the most part, we're trying to do that by working harder on our jobs. And one income or income is only going to get you so far. We have to understand that truth. If you're making money, even if other people are making you money, at some point you have to learn how to make your money make more money. Put your money in things that are going to give you a return. You deserve a return. You deserve to get money back from your money. You just got to be smart about where you put it. And some people are not. But I hope by watching this video, you become smarter about where you can put your money. I'm not saying the stock market is everything. It's one way of investing. There's nothing wrong with it at all. You can make money on the stock market. You can make millions of dollars. Start in the stock market today. If you like the video, be sure to give me a thumbs up. Leave me a comment down in the comment section and let me know your thoughts on the video. I may continue to do and give more information about the stock market depending on if you guys want to see this type of content. I'm all about personal development and helping you grow to become the best version of yourself. But the one way that you do that, you have to get your finances right and you have to be financially free so that you're not constantly worried about money. Just imagine what life would be like if you didn't have to stress about the necessities of life and you can get whatever you want. If you had that opportunity to buy whatever you want, then you probably would be better mentally. So, from a professional development life coach, I implore you to really look into getting your finances right and start investing. Be sure to subscribe to the channel so that you can get more videos just like these. I appreciate you for tuning in, and I'll talk to you next time.